I'll start off by exactly asking the fundamental question. Where is capital not, and where should it be? Imad, I'll give that to you.
Me?
Please, yeah, Imad, go ahead. Oh, sorry, just asking, where is capital not, but should be? So when looking at frontier markets, for example, where is it offering the highest long-term reward with apparent risk, for example?
Yes. Let me just introduce briefly where we invest. So I run a PE and VC platform, and we invest mainly in the MENA region at large, but GCC being our main focus. I would say, I mean, I know not all the GCC is categorized as frontier market. Some of it is, and some of it is not. But generally, the GCC is underinvested as a destination. I've been investing in this market for now almost 20 years. It's a very, very stable market, politically, economically, and most importantly, I mean, the biggest risk in frontier markets is exchange rate. It's a killer. When we invest in other frontier market, we do very well because they're growing, but then you get hit with the exchange rate, especially lately, and you get killed for that. So the GCC is, I mean, Oman is one of the frontier markets, for example, very stable, very stable. Bahrain as well, very stable. So it's one of probably the places I would put more and more money, and should deserve to have more and more money.
What about on the industry front, for example? Because, we see the hype around AI, for example, right? Everyone's investing in that, semiconductors and all of that. But what about conversations I've had before are saying, but we're neglecting the other verticals, such as automation and other supporting, type of industries that don't get as much capital. Are there specific areas, of investment, whether we're talking fisheries or, other industries that you think are lacking in investment and might yield good opportunities? And maybe I'll extend this one to Azza.
Yeah, I mean, we kind of, we don't necessarily follow the flavor of the month because as a private equity investor, you have to have a long-term view, and we know that flavor will eventually change, and you don't want to get at the peak of that market. So we've, one of the biggest themes that we have supported, particularly in the MENA region, is, consumer, the consumer sector and verticals. Because throughout, I mean, all the emerging market and frontier markets specifically, the consumer trends are evolving very quickly. Whatever you're investing in, for example, we invest in beauty services, beauty products, they're booming. Now we've just seen in Saudi Arabia the first listed company in the beauty sector, nice one. And you see that evolving, and the trend is amazing. So, this is a sure bet in emerging markets, particularly in this region.
And we're at a very interesting point, I think, for this conversation where, a lot of countries, that are coming out of conflict, you have Syria, which is opening up its economy, Lebanon as well, with discussions of, in South Lebanon having an economic zone, same thing with Gaza and things like that. So I'm curious, I'll direct this to Zach in terms of how does perception differ from reality in terms of when people are making investments? Are they going by perception in terms of what's obvious to them, or are they looking at the data and seeing where opportunity lies?
Yeah, thanks. Look, so we run multi-asset strategies and also bottom-up equity strategies. So we come at it from a listed perspective, but also external funds of funds management. And so just in terms of your question, Salim, and I also representing probably the developed market investor here, right? They tend to have very tunnel vision of where they tend to invest. The portfolios are actually not as diversified as you'd think. And to your point, one of the things they have concerns around is obviously volatility, the perceived volatility in fiscal, budget, leadership. But if you actually look at the data, a well-diversified frontier market, so index, like the MSCI Frontier Market Index, actually has a much lower volatility than MSCI ACWI and even the MSCI USA. So a lot of the perceived risk is actually in your head because the hard data suggests otherwise. Now, that's not to suggest that there isn't risk in these industries, and in these regions. But you've got to be cautious. You've got to be well diversified, but the opportunities are there. Again, your point is for a developed market investor, from an asset allocation point of view, you've already got overexposure to the US, to Europe, well, not so much, but now the change seems to be towards Europe. So you may as well look at other opportunities, like frontier markets. And you've heard so many speakers before us. There are some very interesting opportunities.
Definitely, and I think it's just not writing off a good opportunity as bad, just, with perception and, to your point, and yeah, not only doing that one thing, but also diversifying and, taking that risk, because there is risk. We're not saying that it's very black and white where there's absolutely no risk, but the idea is that in some cases there might be more of a long-term reward as an early mover, but at the same time, might have that higher risk involved, and you have to diversify, not to put all your eggs in one basket. So as we were talking about, different geographies and providing different opportunities, Oman seems to stand out as one of those. Azza, can you talk about what is it about Oman maybe that would be a success factor when looking at long-term investment?
Thank you, Salim. I'll just build on what Imad had been saying. Oman is a market that's been recently overlooked, and it's great to hear him saying the stability there. Yes, the market is stable now, but unfortunately, it's not yet fully priced in the market. We've seen we're back at investment grade after 7 years of being too near junk rated. Public debt is already down to 34% from almost 70% in 2021. Banking buffer is one of the highest in the region. And then you have FDIs that are growing. And if you compare the level of FDI inflows to Oman in comparative to the size of the economy, it's the highest in the region over the past 4 years. And all of these combine at a time where the economy is growing, and not only growing the normal way, the hydrocarbon-driven way, it's actually driven by the non-hydrocarbon sectors, and it's one of the highest rates in the region, 4% non-hydrocarbon growth in the region, which is solid. Adding all of these at a time where we continuously hear the positive affirmation from credit rating agencies just showcase how the sovereign structure risk have actually declined in recent years.
And if you had to identify, for example, the top 5 maybe unrecognized industries that should be invested in Oman that people don't know about, what would you say they are?
Okay, so it wouldn't be that people don't know about. This might be traditional, but should be there in radar. Number 1 would be definitely manufacturing. Why is that? Because now it's no longer a case of promise. It's already it's a sector that we see volume. And remember, we sit in a position where it's 3 hours drive from almost 2 billion consumers. It's 5 hours sailing, 3-hour flight, sorry, and 5 hours sailing from 2 billion consumers as well. And that's a market that you should be tapping in, and an economy where ports are modern, standard, and easily accessible. And if I stick on that accessibility aspect, the second one would definitely be logistics. It's a proven case. We have seen it during the summer. Oman is the country that did the heavy lifting when we had tension over the Strait of Hormuz. Ships were directed to Oman using Oman ports, and then used the land corridors to transfer to the rest of the region. And the third one will definitely be technology. And I would like to focus on fintech because that's an area we at Ominvest are heavily invested in, specifically all type of financial services, and the focus is on fintech. On the government side, the groundwork is already being done. All the regulations are there to support the industry. Plus, it matches very well with Vision 2040, hence the support from the government. And it's a sector that is very scalable for early movers who are going to tap into the market, and exportable without any boundaries.
Yeah, and exactly as Zach was saying as well in terms of diversifying, like when people are looking to invest in the region, when you have like another strong GCC country, then it makes the region more of an opportunity in that sense. So it's not saying one is better than the other, but it's just saying that there's opportunity that maybe is going unnoticed or not as recognized as others.
Can I add just 2 sectors actually to Azza?
Yes,
hospitality and education.
Oh, definitely.
I mean, we looked at so many interesting investments there. So.
I think if we start naming them, we won't finish that today.
Oh, sorry, I didn't hear that last part in the mic. Sorry, what was that?
Hospitality
yes,
and education.
Yes. Definitely, exactly. That's what I know Oman for as well, definitely.
Yeah.
And Taimoor, I'll extend this to you because going into definitions, because we're talking about frontier markets here, but how do you differentiate when a frontier market becomes an emerging market when we're having this discussion?
No, thank you. So just a quick background on myself. Taimoor Labib, head of Affirma Capital, founding partner. We spun off of Standard Chartered private equity 6 years ago. We bought the business from the bank. We manage about $5 billion, traditional mid-market private equity, Middle East, Africa, and Asia. So for us, all we do is EM. And I would say, probably the closest frontier markets are maybe Vietnam, probably Nigeria, one could say Egypt as well, but Egypt for us is emerging. But I think it's a few things have to happen. I think number one, what is your return profile? Because for an emerging market deal on the private equity side, you need about a 2.5x and a 25% unlevered return to begin with. So if you're doing a frontier deal, what does that mean? Is 3x, 3.5x? So the returns, I think, number one, really have to be there. Two, I think these frontier markets are really under the radar. I would say probably you could say 30 years ago or 20 years ago, Nigeria was certainly a frontier market. Today, I think it's clearly EM, as is Egypt. I think sort of once, sort of hot money starts coming in and out, especially on the local exchanges, that's also, very helpful. And then last point I would say is you really need a very strong sort of government support, working very closely with the business community to become a proper EM country. Because I think without that, maybe you have some good sectors, maybe there are some deals to be done on one.
Without regulation, it doesn't happen, right?
Regulation isn't there. How are you going to exit? Is someone going to block the deal from a regulatory perspective after a year and a half waiting for the deal to pass regulatory hurdles? So it really requires very smart people at the top working very closely with the business community and the politicians as well.
And that's what I hear across the board. Every time I do a panel or have a discussion or research in a specific industry, it's that if the regulation isn't there, it's going to be difficult to operate. And that kind of leads to my next question anyway, in terms of when is it too early to invest in because we're saying where as a topic that where people are not investing in, but maybe it's for a reason. Sometimes it is too early and other times it's not, or you're just at the right opportune time to capture that opportunity. How do you make that decision? That's a very difficult one, I think. So I'll pose it to anyone who's open to answering that one.
The first point I'll make is sometimes you just got to appreciate the market knows more than you. So I think that's the first point. So sometimes you need to accept that fact that you're not probably the smartest person in the room and you don't know anything. And the other point is, I think on that, sometimes it makes sense not to be the first mover advantage. You let someone else be the trailblazer and let them either get the easy gains. We're happy to miss out on some gains if that reduces our risk when we come in. And sometimes it makes sense when you've got high conviction, where you've done a lot of work and and you've got patient capital. I mean, the first thing we ask when we invest in something is, would we want to be in this in 5 years' time? That's the first question we ask. And so I think it depends on the situation. And then changing regulation, government support and all that, when that all starts, especially when we're talking about frontier markets, I think you start to get a little bit more confident. But I think it all really depends on the situation.
And I think on this point, you really have to differentiate between public markets versus private markets, because if you're like Zach and you're running a public book, and if it doesn't work out, you can cut your loss and you can get your liquidity back. Maybe there's a small loss, but on a private deal, how are you going to exit that? You're stuck for a very long time. So I think on the private side, who's going to actually go live on the ground? Who's going to get you the exit? Who's going to sit on the board? Who's going to work with the governments? All those type of things. So I think probably it's much easier to take a chance on a public transaction than a private one in terms of really understanding what's truly happening on the ground.
Mm-hmm. No, that's interesting. And I mean, I was bringing that up, and always the example I think of mine is more of a personal investment, but it's if I think it was 2010, 2012, if I bought crypto, like Bitcoin, when it was like the cost of a pizza. Imagine what that would be today, So you always think about what is that far-fetched thing in terms of the high risk, high reward, but at the same time, I think, again, going back to what you said, Zach, it's about diversifying, but then also, as you said, Taimoor, it's like looking at the long term, right? And seeing which one, there might be risk there, but it's also looking, are the foundational factors there for actual long-term growth to mitigate, that type of risk. And I'm kind of looking for now for success cases, in the region. We are in a place where a number of countries are post-conflict, and that have markets that are paying off. There are examples in the region, like Iraq and such. So how do you view these areas? Again, I'll extend this to anyone in terms of post-conflict countries being opportunities. Syria seems to be the big one at the moment where it's gaining the interest for a lot of investment.
I mean, one of the tests, again, where do we invest is, it's a very simple test. Do we travel there or not? I mean, we invest also in private markets, and we need to see what we're investing in. So, that's for us a big test. In Iraq, as if I can regress a little bit, but Iraq till recently, it was a place where we cannot travel, so we didn't invest. Now we're looking at it very actively. So going back to your question, I mean, today Palestine or Gaza is a bit too early for us. I mean, maybe somebody else will venture. Lebanon, Syria, maybe, okay, but Syria particularly needs a bit more stability as well as Yemen. So.
And now, important.
On this point also, I think you have to be very comfortable with the sector that you're looking at.
Yeah.
And Imad may have said, okay, I've done 5 PET deals in UK, Middle East, GCC, and now there's one in Syria. I'm already comfortable with the sector. Let me look at it. But I think first and foremost, do you truly understand the sector or not before you're even looking sort of more outbound?
Definitely, and I think that relies on probably having the right partners who are on the ground and understand, correct? So, I mean, can you talk about, Azza, I'll extend this to you, about how critical having that right relationship is, for example, in this case, like to operate on the ground, to be able, to understand how things work. Regulations can be different, or even if they appear one way, are actually another. How important are these types of relationships that, help you actually operate?
Before I jump into that question, I would like to address your previous question.
Yeah, please.
Here, I would like to take the example of Iraq, for example. It's a market that is very supported by fundamentals if you were to go into specific sectors. However, it just depends on your risk tolerance. If you're willing to take that risk, then definitely the rewards are going to be as much higher. Now, going back to your second question, generally investing in frontier market, it comes with partnerships. You need partnerships in the ground, and you need solid partnerships. I would explain more in the example for Oman in our case. You've got one on the sovereign side. So I'll give an example of Oman Investments Authority, for example, that could either co-invest financially with any global investor, or strategically, or through specialized of one of its arm, be it in logistics, manufacturing, telecom, you name it, OIs across the board in Oman. And that is only one example from the sovereign side. You also have a number of other smaller sovereign entities that are also open up for investments. The other side would be the private side. Definitely, it cannot always be the case to invest with the government. Some leading private entities or private institutions in a certain economy are also willing to welcome investors and to partner on the ground. For us at Ominvest, we're heavily focused on financial service, insurance, leasing, and fintech. And these are the sector we are willing to invest more, be it locally or regionally, because we're also expanding in the region. So having the mix of sovereign as well as private gives investors the confidence to actually deploy capital in a certain market.
It reminds me of like Oracle with ChatGPT, because a lot of startups are the ones that are bringing in these new technologies that like boom, and you never know which one it's going to be. But at the same time, instead of just focusing on the public, which might be a bit more of a safe guarantee, but it's worth exploring and understanding on the ground, from the community, like what technologies are developing, that type of thing really speaks to your point. So that's where you know how to make those right types of investments. And again, being in the region, are shifting regional alliances changing investor sentiment? I'll extend this to Imad and Taimoor. Looking at how collaborations, like say between Egypt, Turkey, and Qatar, for example, investor confidence in rebuilding Gaza or similar. How are you seeing that?
It's definitely a positive. I mean, collaborations are always a positive. So, less politics and more collaboration and open markets is always a big plus. And this is what I think what the region deserves, and that again, especially the GCC, that stability that existed for decades is amazing because of collaborations, right?
Exactly.
And now we see that trickling. It's a bumpy road. We know that. I mean, but we see that trickling. That there is peace. There is really a genuine push for peace over the last few decades. And it's a bumpy road, but I think the direction is clear.
Definitely.
Yeah, I mean, I think if, all this, hopefully unity and stuff going forward is very helpful. I'll give you a statistic. There's actually the Arabic-speaking bloc in MENA is about 400 million people once you add everyone. And that's a huge population once all these countries are taken together. So if there's more investment between the countries, if the regulatory framework is easier to invest, it could be very good. And another example is Africa. We do a lot of work in sub-Saharan Africa. It's still very difficult to travel within Africa. You're going to end up, if you want to take a Africa to Africa flight, you may pop up to London or Dubai while you're already, say, in Nigeria or somewhere, because you don't want to take that route within the country. So I do think as these markets become more streamlined, and again, I think a lot of this comes back to the government approach. This stuff is difficult. It requires sort of winners and losers, and it requires the governments and the key business people to work very closely with each other to help with these frameworks.
Yeah, and definitely, I think to both of your points that collaboration is becoming so much more important nowadays than connectivity. I think COVID taught us that lesson early on, where like working together you find solutions, but if you're working independent, then everyone's going to suffer. We're seeing the result of tariffs, of a more fragmented, everyone operating independently, but the countries that are working with others more, like there was a Henley and Partners passport index thing where the US had gone down 10, the UAE had gone up 1, where the UAE passport is exceeding, and it shows in terms of partnership diplomacy is creating opportunity, connections, and that's also attracting more business to the region because they're finding it as a trustworthy place to make investments. So even if there are industries that are a bit higher risk, but the overall environment is proving to be reliable and a place to work with versus added regulations and such to encourage investment. So now shifting to a global asset allocator view, do frontier markets make sense, and how should global equity managers evaluate frontier markets, looking at, say, what biases or misconceptions need to be challenged? I'll direct that to Zach.
Yeah, look, from an asset allocation point of view, like I mentioned before, MSCI Frontier Markets, 10-year average vol per annum, 10% MSCI ACWI, 15% nearly, and S&P 500, or not S&P 500, MSCI USA, nearly 19%. So if you're an asset allocator and you're trying to get your Sharpe ratio up, I mean, perhaps you should be looking at those vol numbers and whatnot. But from a diversification point of view, like I said, I think a lot of the developed market asset allocators have such a tunnel vision, and it's worked. I mean, S&P 500 is up like 16-70% per annum for the last 10, 15 years, so it has worked. But if you want to genuinely uncorrelate it, so there's low correlation between frontier markets and developed markets. If you genuinely want diversification, if you're looking for low vol, I think these are the opportunities that you should be seeking. But beyond that, from a earnings growth perspective, you've got to understand some of these companies are giving you between 10 to 15% earnings growth per annum for the next 10 years. Their ROEs are not 10, 15%, they're 25, 30%. Their return on invested capital is like 30, 40%. They don't need leverage to fund their next growth. They just need good regulation, government support, and get the hell out of my way and let me execute, because often what they are implementing in the frontier markets are what the developed markets are already enjoying, like Uber-like delivery mechanisms and whatnot. So from an asset allocator's point of view, depending on what your mandate is and what your risk profile is, perceived or otherwise, this is an area you should definitely be looking at.
And staying with the theme of our conversation so far, and like with frontier markets, another thing that we've been covering at the National Deeply is a lot of wealth that's moving to the Gulf, because it's not only that the Gulf is performing well and doing a lot, but it's also a connection to the rest of the global South. And I'm curious, from your perspectives, how do you see, are frontier markets, in the in other countries of the global South being seen as like a type of innovation in itself? How are you seeing those, countries that, talking about Pakistan, talking about, others, in the global South or Southeast Asia that are maybe appearing as good investment opportunities that might not be so obvious? I'll send that to anyone, please, Imad.
Basically, I mean, The good thing, I mean, again, I borrow from our investment experience. The good thing about frontier markets, because there is innovation happens somewhere else, so you can see the trends, and then you can basically invest a bit late with that knowledge, what's working, what's not. And just by following that model, you'll do very well. So yes, there are a lot of opportunities, and you mentioned Uber as an example. You know, Uber started 1990 or anyway, two decades ago. And then a lot of people borrowed that concept in Southeast Asia and elsewhere, and then you see that being super successful. So it's almost a slam dunk if you do that. And yes, in technology, I mean, we have a VC fund that does that in a way, at least partially. So we do see what's happening in AI other than AI, and then we try to see if it's working. And that's part actually of our analysis. What's working in the West, then we tweak it a little bit, see if it's going to work here.
No, that's a good point. It's not just about identifying the technology earlier, but it's about implementation. And if you have countries that have not utilized it yet, if you're one of the first people to do that, it's definitely something where you can, be a leader in that, in the years to come. And we have about a minute and a half left. I'll extend the same question. Exactly, would you like to answer that one in terms of frontier markets and how are they appearing? Or anyone else who'd like to jump in? Azza?
Zach, you want to go ahead? Oh, okay. So from my side, I would just add actually what Imad was saying now. Sometimes it gets important to look past that frontier label because opportunities are there regardless of the market, regardless of the label. It's just that what we need to look at is a market that will provide us with the compounding steady growth, but the environment should be stable, which a lot of economies are actually providing regardless of the label that they have, and Oman is definitely one of those.
Yeah.
I think just to add to that, I mean, we put everything under the frontier market because of a classification. But really, it comes in two buckets. I mean, they're really unstable frontier markets. And there are places like Oman who are super stable, but they haven't moved up the ladder for some technical reason. But
hence we need to overlook the label sometimes.
Yeah, exactly. So I mean,
you still have to do your homework. It's not a blanket statement when we're talking about frontier markets. Exactly, looking at the data and minimizing risk, but also seeing the potential for opportunity and again diversifying.
Yeah.
I think that's why the data shows that frontier markets have low correlation. When you have a nice mixed portfolio of frontier market stocks, you'll find they're very uncorrelated. What they're doing in Sahara Desert is very different to what they're doing in potentially Cambodia or Vietnam. Even Vietnam is no longer a frontier market, so well understood. And I think that's why there's the opportunity there. You can genuinely put together a diversified portfolio, uncorrelated.
Definitely. Well, guys, thank you so much, and this is all we have time for, but I think there's so much to discuss here, and I know I've learned so much, so thank you for your time, and thank you for listening.